Financial markets move in response to economic and financial events. And next Wednesday, US time, the Federal Reserve is expected to reduce the target federal funds rate by 25 basis points. And that reduction is signaling that the federal funds rate won't change until March of next year. We have such an amazing global family. I'm so very grateful to know each and every one of you. And we have such amazing comments each and every day. Thank you everybody for the very kind birthday wishes. And before Christmas comes out, I'll have a very special present for you. The Profiting from CTKS Method structure course will be coming out, and you can get it absolutely free. You don't have to pay $700, you can get it for nothing. Of course, conditions do apply, and hurry, this will close very shortly. And just a quick reminder, you can get the CTKS Method cheat sheet completely free from ctksmethod.org. And there are a number of videos in here that you can look through to better understand how you can fill it out. And economic events do matter. There are also some videos on ctksmethod.org that will help you to realize profits inside the market. When we look at row 1 of the cheat sheet, we can see that gave the dollar strength, and also we saw the 10-year yield and the 2-year yield coming up. The fear gauge of the market came down, and that resulted in a push up in Bitcoin's price. The concept of increased stimulus is very good for Bitcoin. Also, inflation is good for Bitcoin. The increase in the 10-year and the 2-year acted negatively on gold and silver from row 2. The DXY strength translated into Euro-dollar and Aussie-dollar weakness, and the threat of increased tariffs on China is pushing the Aussie-dollar down. We can also see that copper is under pressure at the current time. Even though we saw inside row 3, the S&P 500 coming down, that kick up was very positive, and we've seen even though we had this retracement which played out on Bitcoin, the concept of more economic stimulus is a major driver for crypto prices. Zooming out a little bit and looking at the Nasdaq futures, we can see Bitcoin is closely following the Nasdaq at the current time. In yesterday's video, we were just here as Bitcoin started to take off. We saw that it just pretty much meandered around, and then with the Fed just lowering the probability of rate cuts next year and the stimulus that would naturally flow from that, we saw that Bitcoin increased. But realistically, what was important were the structural levels. If it's not going below, it's going above. The key level to watch, given in yesterday's video, was 99,934 and 102,084. If we managed to stay above the 99,934, we had a strong probability of coming up to the 102,084 level. If we failed on the 99,934 level, we were likely to get negatively structurally attracted to the 97,180 mark. Next Wednesday, the Fed will meet to alter the federal funds rate. It's typically a time in markets that gets very volatile, so please be aware of that. Understanding the structural levels around such times is vitally important. I made a couple of notes here just to help you out. The federal funds rate is unlikely to be cut until Q1 of 2025. Further fiscal stimulus is likely. Tariffs will be introduced by President-elect Trump when he's inaugurated, and that is likely to create sticky inflation and cost push inflation. The DXY has done incredibly well. It's put in its biggest weekly gain in a month, and there was a surprise UK economic contraction. The levels to watch across the weekend, this 102,084 level and still the 99,934 level. The bulls will seek to get Bitcoin's price up above that 102,084 to challenge the 104,185 level. The bears will seek to push Bitcoin below the 99,934 to challenge the 97,180 mark. Please let me know in the comments which way do you think it will go, and are you doing your 3-dimensional risk management? The Profiting from CTKS Method structure will include a number of indicators, and this particular indicator has proved incredibly reliable. It's a capitulation indicator, just putting in where Bitcoin experienced blow-off tops and blow-off bottoms. It's the culmination of many different facets of market action. One thing that we can see when we look at this chart here, we're not getting any green areas or any red areas at the current time. And there's also another way to look at where you get blow off tops and blow off bottoms. This particular area here, you can see it's just come down. When this gets into the green area, we expect Bitcoin to be topping out or just have a massive bull run. It doesn't mean that it's reached the top, but it means that it's blowing up big time. The same goes for when we see capitulation spikes like this, and when we get very deep capitulation spikes, that's when the entire market capitulates. For example, in 2020, the spike was down here. They are the best single areas where you could buy Bitcoin or practically anything else. Our community is a specialist on buy on red, sell on green. And if you're an investor, you want to be investing on these spikes downwards. They will just change your investing profits for the better. Therefore, when looking at the Bitcoin capitulation indicator, we can see that things are looking reasonably good here. This particular chart is on a daily basis and goes from 2018. Please let me know if you would like me to include this in the daily update. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.